You're making my case that gold has real value. People have fought very hard for it, and they're not about to give it up easily. And again, I prefer physical gold. You keep coming back to the paper gold. I agree in some ways about paper gold, but I don't think those issues apply to physical gold. The cost to secure it, but listen, accepting the fact that as Bitcoin, if it achieves the value of gold as you're suggesting, it's a sitting duck. It's sitting out in the open and can be easily attacked. I would rather have my money in a safety of my gold in a safety deposit box than out in the open where once it's a threat to the currency, and you can't deny that it's not going to be a threat. US dollar is going to benefit from this. I don't know how you can possibly say that when you're talking about 20% money growth every year, now and forever. That's how you destroy a currency. The US dollar is not going to benefit from this. Bitcoin pretends that it's going to provide the solution. They will kill it. It's that simple.
Thank you, Frank. Thank you for your rebuttal. We will move on to our next topic now, which is historical performance. Michael, I'll begin with you. Bitcoin is appreciating at 200% a year, and you have said we cannot expect it to expand any faster. So one of Bitcoin's biggest strengths is clearly its price performance. But could it also not present its biggest risk? The higher Bitcoin gets, the more fear of missing out trait catches fire. If this risk-taking behavior continues, isn't it causing a risk in and of itself, since the price may be based purely on speculation? You have 5 minutes on this topic.
Well, I think Bitcoin's getting much less risky, and I'm going to start with a review of the history here. Its Sharpe ratio is 4.7 versus 0.43% for gold. Over 5 years, $1 invested in gold would yield $1.33. $1 invested in Bitcoin gives you $132 for a Bitcoin. If you actually chose gold instead of Bitcoin, you lost 99% of your wealth. It's devastating. Over a decade, Bitcoin's running about 190% on average every year versus 1.65% for gold. And again, the Sharpe ratio is 4x as much. Let's take a century. Well, people know that gold was $20 an ounce, and now it's $1,700 an ounce. And so you could say, well, it's like up almost like factor of 80 or 90. But when you actually risk adjust it, you realize there's nobody that actually got that return over the course of the century. 95% of the gold was confiscated in the last 100 years. So maybe theoretically the United States government might have got that gain, but everybody in Russia, China, every country in Europe, everybody in South America and Asia, they all lost their gold. So if you do a risk-adjusted calculation, you find that you invest $1, it should be worth $100, but you lost it, not all of it, 95% of the time, you got $5. And so the real risk-adjusted return over a century is 1.5% per year. It's not any better than the last decade. It's devastating. Over a millennium, gold, 2,000 years ago, gold was like 80% of money. Gold was money. And then it slid from 80% to 40%, in the Middle Ages. By the time we got to 1940, it's 40, and then 30, and then 20. And today, the monetary value of gold is maybe 5 trillion, half of the gold supply, and the total store of value in the economy is 250 trillion. So you divide 5 trillion into 250 trillion, and gold is 2% of all money. Over that time period, it came with thousands, if not millions, of massacres and seizures. People talk about Bitcoin being volatile, but in the year where Bitcoin went up 693% in 12 months, here are the maximum drawdowns if you look at the end of day closing price on Binance. 13%, 10%, 14%, 11%, 17%, 11%, 25%, that was the worst on 126. 21%, 16%, and 12%. So in fact, in order to get a max drawdown at 25%, to get a 693% advance is pretty historic performance. Bitcoin liquidities increased by a factor of 10 versus normal days over the past 6 months. We had 6.9 billion trade on Binance 2 days ago or a day ago. So you're talking about $10 billion a day in the spot market.